Hello there, YouTube. Welcome to my channel. This is the Frugal Investor. In this video, we are going to go over the top 5 best dividend stocks that you can hold in your portfolio in 2021. These 5 stocks are all in different sectors, and most of them are available at a great price at this point. Before we start, I want to thank you, the 59 people that subscribe to my channel. It means a lot to me. Thanks a lot. Thanks a lot for subscribing. And all those people who are watching this video and watch the other videos. I really appreciate you guys. Thanks a lot for watching. Really had to take out the time to make these videos, and I really appreciate you. With that said, let's get right into the video. It's going to be a lot of fun. The first company on this list is from the financial sector, and it is JPMorgan Chase. JPMorgan Chase is the largest bank in the United States. The CEO is Jamie Dimon, and everybody in the bank, even at the retail level, I go to Chase branch close to my house multiple times a week, and they all speak really well of the CEO. The banks in the US are in a very solid position. They are backed by the US government because they are literally the backbone of our economy. During a recent stress test, all the banks were considered really safe, and even in times of pandemic or recession. JP Morgan and Chase at this time is a really great buy, and the main reason is the federal government allowed the bank to buy their own shares. Through this news alone, the stock jumped 5%. News came after the Fed's second round of stress tests in 2020. JP Morgan will be buying 30 billions worth of stocks, of its own stocks. So when a company does a share buyback, it's reducing the number of stocks that are out in the market, putting more money in the pockets of shareholders, increasing the earnings per share. So it's good for the people who own the stock. And that's why the stock jumped 5%, because a lot of people went in after hearing the news and bought the company. If we look at the numbers for JP Morgan and Chase, over the past 5 years, the bank is up almost by 88%. Over the past year, the bank is down by 9%, and it's still recovering from its pandemic lows. P by E ratio is 16.45. So that means it'll take 16 years for an investor to get its money back. Since we are dividend investors, let's look at the dividends. The dividend yield is 2.87%. The annual payout per stock is $3.60, and the net payout ratio is 47.25%. The 5-year growth rate is 16.17%. If you look at their dividend history, which is also a very important metric when you are measuring companies, the company has never missed a dividend over the past 22 years. Dividend did go down during the financial collapse of 2008, 2009, 2010, but still the dividend was being paid out. This company is a great company for any beginner, advanced, or intermediate dividend investor who wants to hold great, solid dividend paying companies in their portfolio. I personally bought more of JP Morgan and Chase after the news for the Fed stress test and the news for share buybacks, and I will be buying more in the near future for my portfolio and for the long term. The second company on this list is a health company. It is Johnson and Johnson. Johnson and Johnson is like the index fund of health sector. This is one of the companies that you can find in any dividend investor's portfolio. It is a company that is very well diversified with its products, ranging from skincare, beauty products, baby products, healthcare, medical equipment, pharmaceuticals. So it is very well diversified in its products, and it is also very well diversified in different countries. 50% of its business is in international markets, and 50% of its business is in USA markets. In the past 5 years, the stock has gone up by 50%. Since we are dividend investors, let's look at the dividend. The dividend yield is 2.59% and the annual payout is $4.04 per stock. The payout ratio is 50.66% and they have been growing their dividend for the past 58 years. They have been constantly growing their dividends. They have never missed out on a dividend. That is a dividend king. And this is what makes this company fabulous and so attractive for any dividend investor in their portfolio. I personally own Johnson& Johnson and I buy it every month for my portfolio because it's so well diversified across different markets, across different products. Almost every home has a Johnson& Johnson product in their house. Also, the company has a strong history of paying out dividends year over year for the last 30 years and they have never missed out on a dividend. And that is what makes it so valuable to me in my portfolio for financial independence. And I think every investor must have this dividend stock in their portfolio in 2021 and the years ahead. The third stock in this list is also one of my absolute favorites, none other than McDonald's. McDonald's, it is not just a fast food company. They have recently bought some tech companies and they have really upped their game with their mobile app, their mobile delivery orders. They're in three sectors: real estate, tech, and fast food. Their recent franchisee model owns the land where McDonald's is built and then they franchise it out to the franchisees and they pay rent for the land on which the franchisee is operating. During this pandemic, I have been going to McDonald's more often than ever before, and I think it's been busier. The lines have been longer and longer in the drive-thrus during this pandemic than I have ever seen before. McDonald's is very well diversified with a huge part of its business located in different countries. It's spread out across the world. Since we are dividend investors, let's look at the dividend. The dividend yield for the stock is 2.44%. One stock of McDonald's pays out $5.16 for the year. The payout ratio is 83.32%, and they have been growing their dividend for the past 19 years. The company has been paying out dividend for the past 30 years, and they have never missed out on their dividends. And that is what makes it the absolute favorite for any dividend investor. The strong history of paying out dividends and the strong and constant growth in the amount of their dividends. Some people might be thinking that the stock is currently overpriced, but as a long-term investor, it really doesn't bother me if the stock is currently overpriced. I'm buying it for the long term and I'm going to be dollar cost averaging every month these dividend companies to increase my stake and increase my dividend income every quarter, year over year. It makes this stock a great buy for the year 2021 and the years ahead for any dividend investor. The fourth stock on this list is a tech company. And this company, it doesn't pay out a huge dividend, but they have been constantly increasing their dividend. And I think in the coming years, they will have a substantial amount of dividend payments for their stock. This company can be considered a growth play, but I could not miss out on this in this list. I think everybody who was trying to invest in 2021 must have this stock in their portfolio, no matter if you're investing for growth or for dividends. I personally dollar cost average every month on this stock, and I love it. I love it. They have a huge market spread. They are very well diversified across different countries. And now there are rumors that they are trying to get into the electro vehicle space. I don't think that is true. I think it is still a rumor, but we will see what this company holds. The stock is currently trading at $133.72. The market cap for this company is almost $2 trillion. In the past 1 year, the stock has gone up by 84%. So that is also, as I mentioned, it is a growth play as well as a dividend play. Let's look at the dividends. The dividend yield is 0.61%, not huge, but it has been growing over the past 9 years. The annual payout is 82 cents for one stock. If we look at the dividend over the past 8 years, they have never missed out a dividend, and they have also been constantly increasing their dividend year over year. Another great thing that is going on for Apple is the CEO, Tim Cook. Tim Cook has been the CEO of Apple since August 2011, and the company has more than 100x under him in its size and in its spread across the world. This guy is a genius for Apple. And that is also what makes this stock so attractive to anybody who is looking for that growth and that dividend play. And the next company on this list is a REIT. It's a real estate investment trust. That's called Realty Income Corp, ticker symbol O. This REIT is really special because it pays out monthly dividends, and not a lot of companies do that. They also have trademarked the name the Monthly Dividend Company, so it's called Realty Income, the Monthly Dividend Company. They have been able to beat the S&P 500 return over the past 26 years. Company has very well diversified portfolio spread out across 50 sectors. The company has constantly been increasing their revenue year over year. Portfolio occupancy rate is 98.6%, and the average lease term is 9.2 years. Currently, they own 6,483 properties spread out across the country in different industries and sectors. They follow the triple N business model. The tenant in their properties does all the work. They maintain the landscape, they take care of the building, any repairs, the tenant takes care of it. So the people in the Realty Income Corp have enough time on their hands to go out and buy more properties and give more returns to the shareholders. If we look at their dividend, over the past 24 years, the company has never missed out on their dividend payments. And they have been constantly increasing their dividend over the past 24 years, which makes it so much attractive for any dividend investor. The stock is currently trading at 61.28 and it's low from its below pandemic highs of $82 per stock. So it is still recovering and trying to get to the number before pandemic. This stock has constantly increased their dividend over the past 27 years. So they are definitely doing something right. And that, in my opinion, that dividend security, monthly paying dividend, diversification of different properties across different sectors, that, in my opinion, makes it a very attractive buy for any dividend investor. And I am dollar cost averaging into this dividend stock every month. So these are my top 5 picks for 2021 that any dividend investor must own in their portfolio. Please let me know in the comments down below which ones do you like the most and which ones do you own in your current portfolio. With that said, thank you for watching and see you in the next one.